Actually, that was network. So the network interrupt us. So what I'm saying is, you are expecting the price to go up, but check the next level at which the market is going to reverse. Here we have the next level, which is right here, next area of resistance. Here also we have next area of resistance. So we expect the price to reach that level and reverse. But you see, it got rejection, only rejection, and it reversed. Still, when it reversed, it got huge rejection. You can see that the rejection from buyers here is strong. Here also is strong, but this one is not strong. Later, it becomes strong rejection, and now strong rejection, it reversed. So it means that anytime the price come to the strong to this support area, if the rejection is not strong, it's not going to reverse. Or if there's no rejection, it's not going to reverse, except the rejection is strong. So that is the psychology behind trading the structure of the market. So the first thing you look for is look for the structure of the market. Just like what I have explained, just exactly what I explained in this video about the structure of the market. Well, this now. So I'm explaining the structure of the market. Then I think somewhere here, this structure, we can see how the market is moving up to this level, down to this level, up, again, down, again, up. So this is the structure. You see the structure of the market is moving up and down. That is how I'm explaining. So the first thing you do first find out or observe the structure of the market. Is it down? Is it up? Or is it sideways? If it is down, you should know what to do. Maybe by drawing trend line, or maybe by making use of change of polarity setup like support become resistance. If it is sideways, you should know what to do. Maybe by using the horizontal line or using Fibonacci retracement, Fibonacci lines. If it is moving upward, maybe you can use the trend line or use the change of polarity setup like support become resistance or resistance become support. So these are the things that one have to take notes whenever you are trading on structure or whenever you're analyzing the structure of the market. So you have to look for the high. Now look at the high here. This is the high, and look at the number. This is the high at which the price has reached. So it means that the price cannot be able to go above this high at that moment. So this high, the market stop here. So this is the high. When the price come to this level, we see the market reverse. So this is the low. Because when market reach this level, no sign of bullish candle, no green candle. But next one was red. And later, after seeing rejection, we now see bullish candle. So it means that from here, the buyers entered. So it means this is the low, this is the high, this is the low. And that is how I marked it. Now, when price goes up, it reverses immediately after rejection. That means this is the new high, or this is the lower high. Because this is the first high and this is the low. This is now the second high. So we have the first high. We can't call it lower high yet because it's still the high. We don't know if the price is going to close above. So we can't call it lower high. So this is lower high. This is lower high. Now until the price break this lower low, once the price break this lower low, we can find, okay, let me explain so that we're not confused here. When price reach this high, it create the high. So we can't call this lower high or higher low. We still call it high. Once the price cross it and reverse, then we can say this is higher high, this is higher high. But the price did not cross it. So we can't quickly judge that this is lower high yet. So we can't say this is also lower low until the price could not, if the price could not be able to break this high, or maybe could not be able to reach the high, we can say this is the lower high. This is high, this is lower high. This is not lower low. It is once the price break this low and reverse, then we can say next level here should be the lower low. So that is how you place your, that is how to analyze the structure of the market. This is high, this is low, this is lower high, this is next level here should be lower low. Now look at this scenario here. The price have finally break this level, and what we have here, we have a huge rejection because the market creates a new low. So this is now our lower low. High, low, lower high, lower low. Then price again went up, reversed from this level. So this is now our lower high. Again, price went down to this level and changed its direction. So this is now our lower low. Price now finally break this level. We can't say this is lower high because the price has finally break this level. It is after the price has break this level, this high, this previous high, then we can conclude that this is the price has break the high. That means we can say this is now higher high, but the price is still below or maybe the same level. We can't say this is lower high or this is higher high. We can say this is high. So we don't know when the market, what the market will do next. We don't know the next high, but this is the high this time around. This is not lower high, this is not lower low, but this is the high. When the price reach this level, it creates the low. So it is when the price cross this high, we can say higher high. Or if the price did not cross the high and close below, we can say lower high. But if the price close below this low, and if the price close below this low, we can say lower low. If the price could not be able to reach this high, we can say lower high. So that is how you analyze the chart. That is how you analyze the structure of the market. So by seeing the structure of the market, or by analyzing the structure of the market this way, it will make you understand how to predict candles and how to predict next market direction. So let's see what happened next. You can see that the price could not be able to break this high. It went down and created low. So we have the high and low. But when price went up and reversed immediately, this is now our lower high. Price again come down and break the previous low here. This is now our lower low. So you draw your trend line here. Draw your trend line. When the price break this trend line, and what happened? It create the high. So we can't say this is high because it create the high. So it is once the price go down and create the low. So if the price again went up and did not reach this high, we can say lower high. If the price now break this low, close below the previous low, then we can say lower low. So that is how you predict market direction. So it depends on the structure of the market. Once you analyze the structure of the market properly, you can be able to predict the next candle. Okay, let me see if truly what happened next. Now you see the price has created high and has created low. So we are expecting what will happen next. Is it going to be higher high or higher low, or lower high or lower low? We don't know yet. So let's watch. I think that was the last. Now you see the market again went up to this level, still create the high. This time the market is not moving down and it's not moving up. It's moving sideways. So the market is creating the high. So this is the high. This is the low. High, low, high, low. If the price reverse, it's going to be high. But if the price did not reverse, maybe by crossing this high and then finally reverse. Then we can say higher high. So I think that was the explanation I was giving in this video. You see, the market did not reverse. So once the price reverse, that is when we can say the price has traded low and has breaking the previous high. So we can say, okay, after the breakout, after breaking the previous high, then we can say higher high. So it means that higher high is a formation like this, higher high and higher low. So it means that the market is now moving up. It is after the breakout that the market will finally reverse. So that is how to analyze the structure of the market. So, so now, according to your question again, you were asking how to find these minor levels. Okay, if you want to predict the next candlestick in a psychological way, one thing you have to follow, the rules you have to follow is that if price come, so according to your question, you are asking if you want to predict the next candlestick, what are the rules we follow? So
It's the network.
yeah, I understand. So what are the rules you should follow? The number one rules is open your chart, analyze the structure. Open your chart, analyze the structure. The reason why most trader or why most of us do not are not profitable in binary option or forex is because once we open the chart, we don't look at the structure of the market. We only want to be trading put option when the market is trying to go up. That is why we keep losing trades. So open the chart, look at the structure of the market. The structure of the market is moving higher highs and higher lows. So in this kind of situation, you want to predict the next candle here. Look for how the structure of the market is forming here. When the price reach this level, or you simply draw the level, draw the support and resistance. Once when the price reach this level, it reverse, right? Again, rejection, it reverse. Here also, it went up to this level, it reverse. You should know that this is how the market is reversing to the downside. That sellers are entering here. Market reverse, market reverse, market reverse. Finally, break out. When the market break out, when the market break the level, when the market break the trend line, the market reverse. You see the market reverse. So when the market now reverse, you should know that this area now is now the buyer's area because buyers are entering at this area. We can see bullish candle, bullish candle, bullish candle. So many buyers at this area. So when the price closes, once it reverses, it comes exactly to this demand area. So we call this area demand area. And how do you say this is a strong demand area? It is when you are seeing it is when you are seeing bullish engulfing. That is when you can declare that this is a strong demand area. Let's assume this is the sorry. Uh, let's assume this is the demand area, right? So at this demand area, we are seeing bullish engulfing multiple times and the hammer. Bullish engulfing it means the buyers are very strong. Hammer it means the buyers are very strong. Bullish engulfing it means the buyers are very strong. Bullish engulfing it means the buyers are very strong. Twisted bottom it means the buyers are very strong. bullish engulfing. So it means that once the price comes to that area, buyers will definitely enter because this is demand area. So many bullish engulfing. It is strong demand area. It means once price comes to the level, it will reverse. You see, after the breakout here, once price comes to that level, immediately price comes back to that level, it's reversed because we have so many bullish engulfing patterns at this area. So it's a strong demand area. So if you want to predict candles, you first look at the chart. That means the chart now, the trend is up and market visit the area, bullish engulfing area, that is demand area with a rejection. This time I'll go with buyers. So with the direction of the trend, because the structure of the market makes me to know that the structure, the trend is up. So the structure tells me that the trend is up. So with that, I should know that I should follow the trend. And how do I follow the trend? Wait for the price to come to that level and come to any strong demand area before you place your trade. So don't ever predict candle when the market is outside or is away from any area. Like this, you say this is a strong candle, but you want to predict call. That is not how to trade. You don't predict call in this kind of situation. You don't predict call. That is not how to trade. So you trade according to what the market is doing at the moment. Not when the market is away from the level, you will now want to place call. No, that is against the rule. The rule is wait for the price to come at a certain level before you place your trade. Now, maybe you want to be trading like 5 candles in a row on every minute. Like the first minute, you place call. Second minute, you place put. Third minute, you place call. Fourth minute, you place put. Let's say you want to be trading like that. That means you have to be smart enough and you have to be someone that is not too slow. For instance, you draw a buyer's area, a demand area. You draw demand area, and the price come to this level. You go with buyers. But after going with buyers, you notice that this candle is very strong, and the buyers here is very weak. You go with sellers. But and again, you now notice that this is the buyers area again. Buyers are still active, and finally you go with buyers. But you quickly draw a seller's area here. This is another seller's area. You quickly draw seller's area here. That means once the price comes to that seller's area, you go with sellers. And again, it didn't reach the buyer's area yet. You still go with sellers. But when you go with sellers, the candle now become weak and about to reach the buyer's area, got rejection. You go with buyers. That is how you predict candles. That is how you analyze the chart and predict candles. That is if you want to predict 5 candles in a row, maximum. I advise you to predict. If you want to do that on. If you want to predict 5 candles in a row, I advise you to do that on 5 trades. Nothing more than that. Or you can do less, or let's say 4 or 3 or 2, but nothing more than 5. If you do more than 5, it means that you are over trading and you are not you will not concentrate. Before you know, you start losing money, so you don't over trade. Okay.
What are the rules to follow if you want to predict the next candlestick?
That is why I say wait for the price to form a certain level. First, look at the chart, the structure. The structure of the market, is it up or down? If the structure is up, that means you have to place your trade for only with buyers alone. If the structure of the trend is up, place your trade only with buyers alone by following the trend. Then 2, wait for the price to come at any certain demand area or buyer's area before you place your trade. Then 3, make sure that there's a rejection. Make sure that there's a rejection in the candle that closed at the buyer's area. Then 4, make sure that you don't place your trade once the price is above the area because you might not know when the market is going to reverse. By the time the market is above this trend line, some trader would like to go with buyers. Okay, let me buy to reach this level. Before you know, sellers enter. So you don't place your trade once the price are away from the area or close above or close below. You don't place your trade. So those are the rules you must follow. Number one, first analyze the chart, the structure. Is it up or down? Number two, don't rush to place your trade. Wait for the price to come at any certain level, at any supply or demand zone. Like this is uptrend, right? Let me go with buyers. So I will wait for the price to come to come to this sub demand area. This is demand area. So I wait for the price to come to this demand area before I place my trade. So if you don't wait for the price to come to the demand area, you start losing trade. So, and again, make sure that the candle that closed at the demand area close with the rejection. Once they close with the rejection, you place your trade. If there's no rejection, don't place your trade. And again, momentum. Momentum is one thing that confuses most of us, most trader mostly, because momentum at times it reverse the market, at times it did not reverse the market. But I will only advise you, if you see a strong momentum approaching a supply or demand area, the market is likely not to reverse. So it is better for you to stay away at that moment. So don't force yourself or don't try to predict candles there. But only if you see the market moving like this before you can predict. But if you see a momentum like this, stay away from momentum. Stay away from momentum. Don't predict during momentum period. So stay away from momentum. Momentum might deceive some traders. It might look as if it's going to reverse, but it will not reverse. So stay away from momentum. And again, all those key levels. When price reach this level, you place put. When price reach this level, you place call. This is another key level, another way to predict candles. So these are the rules you must follow before predicting candles. So don't once you go against the rules, don't once you go against the rules, there's going to be a problem about that. And again, don't trade during the time the network is bad. If the network is bad, don't trade at that period. Yesterday, I took some trade, and some of the reason why I lost some of the trade was because of bad network. So I might be seeing that this candle is going to form red, but immediately I was observing the candle, the network just went off, and the candle still looked like as if it's going to form red, and the time has already expired. So once I place maybe put or call, before you know, by the time the network will come back, the market has already moved on or start moving down or up or going against you. So it's better for you to wait for the price or for you to wait for the network to be in a good condition. Otherwise, you lose. So don't trade during bad network. And again, don't trade during news time. If there's news, avoid trading during news time. Like yesterday in Forex, I spent some hours analyzing the chart of Forex. But I forget one thing. I didn't realize that yesterday, that same period, about 20 minutes to the news time, I didn't know that there's going to be FOMC news event. So once I analyze the chart, I look at it, though the chart will give me 100% sure winning ratio, but because of the news event, the market start moving opposite direction. Even the analysis I did was just in vain. So what I'm saying is you should not trade during news period. So if you want to know the time the market will or the period of news time, you go to this left side, you look at the market analysis, then look at any news that is going to occur. By 2:30, a news occur here and again 3 o'clock, 3:30. Then another news is going to occur by 6. So don't trade during this period. If you trade during this period, the market will not be stable. So that is why we trader always say avoid trading news time because the market is not stable. And reason how the market is not stable, for instance, let's say you want during this news time and you are placing your trade because news event used to last about 30 minutes or 1 hour or most of the time 2 hours. Just what surprised me yesterday about FOMC news. FOMC news lasts up to 4 hours. I was still expecting the news to close or the candle to stop, but the candle is still strong, becoming more stronger because of the news. So it lasts up to 4 hours. So let's assume this news is going to last up to 30 minutes. So during that 30 minutes, and you are now trading. By the time you expect the price to reverse here, the market will just go up, touch the level, and reverse. So you miss the opportunity by waiting for the price to come to this level before you enter the trade. So that is the reason why we always say don't trade during news time, because the market will not be stable. I know a lot of people will lose yesterday because of that FOMC news. The market is not stable at all, and the news lasts up to 4 hours. So it changed the right direction of most trades I analyze. So don't trade during news period. And anything that will distract your attention, don't trade during that time. Don't trade during that time. Anything that will distract your attention. One thing about trading is you have to be in the mode of trading. You have to be in the mode of trading. You have to make it look like as if you are communicating with the candles. Like me, if I want to communicate with the candles, the way I will be analyzing here will be as if I say buyers are very strong, but are not be able to reach this level. So sellers enter. When sellers enter, we have a huge rejection, the opposite side of the candle, and lower rejection, no lower rejection. So it means that with this huge rejection and no lower rejection, and this candle also stop at this range, so it means that this is level at which the sellers entered. That means the seller is going to enter on the next candle. This is how you predict, analyze candle. So once you are focusing or being the mode of trading like that, once you focus on trading and analyzing the chart like that, you shouldn't let anything distract your mind or distract your attention. Because by the time you are waiting for the price to reach, let's say you draw resistance, you are waiting for 2 hours for the price to reach this level. But that 2 hours, something has already distracted your mind. You are not there again. You are not there by the time the market is trying to create a momentum. You are not there by the time the market close without rejection. But you just see the market touch the level and you think the market is going to reverse. Most of the time it will reverse, most of the time it will not reverse. So it's better for you not to distract your mind or distract your attention when you are trading. So these are the rules you must follow. And if you go against the rules, there will be a problem about that. So once one will just be struggling on how to trade once you go against your own rules. So that is what most traders doesn't realize. They always go against the rules, or they don't even know the rules in trading. So they just think maybe you place call at the support, place put at the resistance, but the market doesn't work that way. So this first thing, analyze the chart. So other things added to it, you must be able to know how to control yourself, how to control your emotion. Like we always said, emotion is easier than said than done. It's easier said than done. Emotions, when we talk about emotion, we always say it's easier said than done. That means it is something that you can say easily. Control emotion is something you can say easily. But can you even control your emotion? For instance, I want to go with buyers here and I place call, but the market didn't go up. It formed red and I lost. Most traders, because of the loss they had there, they will likely to place or double their amount. Let's say the loss in trade was $1 because they lost the trade, which supposed to give them a winning trade. They now increase the balance. Let's say, for instance, they have $10, they increase the balance to uh, $9 by investing all the amount. But still, when they place call again, the market still not reverse. They still lost. So it means that from $1 to $9, you have already lost. That means you can't even control yourself. Why don't you accept the loss? You're supposed to accept the loss you had here when you want to go with buyers, but the market went down. You're supposed to accept the loss. Once you accept the loss, go to next chart, go to next trade or next chart. Let's say you now assume that market did not reverse. Fine. Let me look for where the market will definitely reverse. Quickly go to the left side, draw support and resistance. Then you now finally place call. And market did reverse. Market did, you are still using $1, but market still reverse. Here you place call. It did not reverse. Instead of reversing, it went down. But because you control yourself, you want the trade, you wait for the next chart or for the next trade, and you expect the market to reverse at this level. You now place call, and the market did reverse from the support level. Let's say the market formed green and reverse from the support level. When it reverse and form for this, that means you have already recovered the lost trade you have, but the money, you don't recover the money yet. You have already recovered. So that means you accepted the loss here and continue and move on. Accept the loss and move on. Even though you place your trade and the market still goes below your entry, or maybe you won the trade, but the market still close below your entry, don't ever use that mindset to say you want to increase the balance for you to recover the loss. What if you do that? Your mind will not be there again. You now lose the trade. What if you do that and you lose the trade? Before you know, you lost a whole, let's say you lost a whole $100 with just two trades. You lost a whole $100 with just two trades. It's better for you to accept loss. So these are the rules in trading. Accept losses. Losses are very common in trading. Very common in trading. Accept losses. Don't go against the rules. So these are the rules you must follow, and this will only guide you when you are trading in binary option, mostly in binary option, because mostly binary option is more dangerous than any other trading or any other trading platform or any other trade. Binary option is very more dangerous. Within 2 minutes or 1 minute, you can lose $10. You can lose all the account your money, all the money you account. But in forest, let's assume you just know the direction you wait in. You can wait longer for the market to go to your direction, or maybe it may take some time before you start losing. So it means binary option is more dangerous or carry the high risk than forex or any other trading activities. So you have to control yourself, control your emotion, control yourself, control your anger. Don't revenge because of one loss in trade. Don't revenge. Even my video, you will see that anytime I lost a trade, I always accept the losses. If I didn't want to accept the losses, I will not accept. If I didn't want to accept the losses, I will only accept the losses, but not that I will not accept the money I lost. I will accept the money I have lost. That means if I lost one trade and I use the other trade to cover the trade, my money is still in loss because of the profit rate. My money is still in loss. So that means I have accepted losses. I accept the loss, but I did not accept loss in trade. I accept the money I lost, but not the loss in trade. It means that the reason why I did not accept the loss in trade because I want to see that I won all the trade. So if I lost one trade, that means the second trade I'm going to recover that lost trade, not the lost money. If a some trader would like to recover the lost money by doubling the amount, before you know, they still lost the trade. And once they lost the trade, they lost the whole money. So in this case, it's better for you not to take revenge on any lost trade or any lost money, any lost profit you have on trade. So these are the rules you must follow. Now you see this momentum. If the momentum reach this trend line and you expect the market to reverse, don't place your trade. It might not reverse. So it is better for you to look for movement like this that has only one green, one red, something like this, not a momentum. If you are very, or if you are kind of someone that experienced so much in trading, that have experienced many things in trading, you can trade with momentum like this. That okay, with this kind of situation, momentum like this don't always reverse the market. Or with this kind of situation, if the last candle closes as strong red, at this level with the rejection, then that means the market will definitely reverse. Or if the market will close as hammer with this strong rejection, maybe we still continue to the downside. So that means once you have experience with this kind of momentum trade, you're able to trade. But if you don't have any experience or you have only zero experience about momentum trade, better to avoid trading momentum trade. Wait for the price. to move like this, and place your trade at any key level, support or resistance. If you try to trade momentum, you might end up being frustrated because you see this momentum, it got rejection from buyers. Some trader will say, let's go with buyers. But by the time they go with buyers, the market form red. So it will look as if what is really happening. This candle got rejection. Why is it that market got rejection doesn't reverse? You ask diverse kinds of questions, asking people why diverse kinds of questions, because you say market rejects weak candle, but I want to go with buyers. But why is it that the red candle still form? You'll be asking this kind of question. So it's better for you to avoid if you can't or if you don't have experience about this trading, this momentum trade. So these are the things that one have to be careful when trading binary option. So then you say how to trade within the market structure. Then how to predict. I think I've explained that. When does a trend begins? A trend begins once you break the previous low or previous high. This is downtrend. That means the price come to this level and reach this high and reverse. So it means that this is the market. This is when the market will begin. And also, when the price reach the level, it starts showing high. That means this is the high of the level. So if the market is going to reverse to the upside, it might start showing low. Okay, so that is how to know when the new trend will occur. Now, since the market is now below the lower trend line, that means if the market now is below the lower trend and got the rejection here, it might definitely create a new trend to the downside or continue the previous trend to the downside. Okay, so that is how to predict market trend. Let's say assume this is uptrend, but when the market reaches this level, it reverses. So you should know that this is where a downtrend is going to form. So you place your trade in the direction of the trend. So that is how to predict candles. That is how to analyze the chart, the structure of the market. I think the network is giving you a problem. Even me too, network also giving me problem. So I think I should rather stop here for today. And next week or next time, we're still going to have anytime, anything you want to ask, you can ask me in the group chat or in Telegram. And to find a time like this next time. Okay. So I think I should stop here. See you next time. And make sure you watch the video. So anything that doesn't you don't understand, just let me know.